Hello guys, welcome to the Trading Parrot. I know, July is becoming extremely violent with this sort of volatility of Bitcoin just trading within a very narrow range, breaking out but not going anywhere to the upside, then breaking down and not going anywhere to the downside. I'm kind of becoming a scalper once again, taking just small profits and trading just the range for just peanuts. In today's video, we're gonna focus on the potential downside of this breakdown on the daily that we are currently seeing and the potential for it to fake out and not really go into the target. Of course, we need to disclose the potential target of this breakdown. We reinforce the idea that we are in July and why we should be expecting extreme volatility coming in. Both sides are very heavy in liquidity pools. We're not gonna put our head in a hole and ignore the whole picture. We're gonna share everything that we can find. And you wouldn't believe it, but people are getting so bored of Bitcoin that some of them are flipping into Ethereum. I'll show you some big corporations that they are actually doing so these days. Guys, if you like this type of content, make sure you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Yesterday, I covered one video for Bitcoin, one for the general markets, SUI and Solana. Today, definitely I need to touch base with a dedicated video on Ethereum. Let me know in the comments if I'm missing any coin. I think I should probably do Dogecoin as well. People are even swearing at me for not covering that coin, so I'll probably take care of that too. Guys, if you want to get your hands on $30,000 on welcome rewards, there is a link to open a new account on Bybit in the description. Bybit is becoming regulated in Europe. That means that all the problems that you used to have may change very soon, if not already. And they are supporting TradeFi nowadays. You're gonna get access to stocks, forex, indices, everything with just one holding of USDT or USDC. And we continue to see all these people repeating the same charts about the global liquidity M2. They want to keep it simple. And if you're new to the channel, I insist, M2, it's a good factor. It's not the only one. It's not the final one. It's not a Swiss knife that you can use for everything. As long as there is M2 pointing up, Bitcoin goes up. That is just not true. Just look back in time. Don't be Lark Davis. Don't be Quinton. And take a snapshot of the full picture. Focus on beginning of bear markets, because beginning of bear markets look just the same as this. Bitcoin enters bear market before M2 goes down. Just keep that in your mind. Knowing that makes you part of the Parrot army. That doesn't mean that it must fail, but it doesn't mean either that it must succeed. And I think if you have over your shoulders more than 2 neurons, you probably can understand that. Axel is pointing us towards the Bollinger Bands range, hinting that volatility should be coming. Throughout this whole video, we're gonna look at different sources that point out towards an extreme volatility. I'm tempted to say that that's gonna happen in July, but be my guest, I might be wrong, maybe it's in August. I think the timing is within 30 to 60 days of an explosion. And of course, I don't take for granted that it is to the upside, although we are very close to very tempting liquidity on the top end that we've been monitoring for a very long time. All we wanted is to get closer to this liquidity, just like we did in 2024, wanting to get closer to this one. So hopefully in 2025 the story repeats and we use the 2 or 3 pools to get into 115, 125, 140. But if not, we have some decent fun that we can take on this end. Of course, that is gonna disappoint everybody. I am tempted to think that if we go this low, we might still have a new higher high that will completely make everybody disappointed that we still have all-time highs even after a correction of 40-30%. And that's why I remain bullish, because I think that we can either go straight into the liquidity or have a move down and then still go to that liquidity. The Bollinger Bands stretching is the first model that anyone will use to figure that there is a squeeze incoming. Roman is pointing out towards the Bitcoin dominance today, and we're gonna have a look at that too. He's saying that the dominance is showing some early signs of reversal, which may give us an altcoin seesaw that we've been waiting for. I kind of hear the glasses crashing against the wall of people throwing literally, as they watch this video, their coffee against their TVs because saying the altcoin season is coming has become forbidden on crypto Twitter. People get angry just by hearing that, and I don't blame them because we've been talking about a potential altcoin season incoming since the beginning of the cycle, and that's already 3 years ago and we still don't have it. If we go into my dominance chart so far, you can tell that we've been very close to that RSI 7181 that I've been calling for the potential final print of Bitcoin dominance before heading back down and allowing some room for the altcoins to develop. And that is coming precisely from this descending channel in here on the Bitcoin dominance RSI weekly that shows 7181. We have already had one breakdown, layer 1 we could say, and you can see that we continue to break down on a second layer, potentially heading back down into the support. This support in here is at roughly RSI 50. That points at the moment towards an Bitcoin dominance of 63% as of today. It is not an incredible range for altcoins to do a lot, pretty much from 66 to 60, that's just 6%. And if we look at altcoin seasons in the past, they were ranging 33 points, 34 points, and multi-month, let's say 3 months of completely nuts performance for the altcoins. I will adjust my expectations in this cycle, and whatever we get as an altcoin season, if it's just 1 month, 6% down or 10% down, it should be great. Notice as well that the cross-V ratio is pointing as well towards a point of inflection in here, but it already failed when we were in June 2023, so it's a tricky one really. Notice in here we have breakdowns as well on the RSI, but RSI remain above 50 the whole cycle on the weekly and continue to put higher highs constantly. A very strong momentum. And again, Quinten is talking about stake Ethereum all-time high, Ethereum on exchanges all-time low, which are great indications. Arkham is also showing a company that sold all their Bitcoin and bought 200 millions of Ethereum. We're talking about Bit Digital, and they made it public, so people are wondering what do they know or why actually flipping their 28 million of Bitcoin and then going big on Ethereum. Anyways, it sounds promising. Also, CryptoQuant today is talking about the Bitcoin Combined Market Index, which is our second model pointing towards big volatility incoming. You can see in this circle in here, when we were pinching the moving average of the BCMI, we started seeing an expansion in the market. In this area in here, during the bottoming process of the megaphone pattern in 2024, we were below the MA and we had incoming again another expansion of the market. When I say expansion, it doesn't say direction. It could be up or down. We're just calling for volatility, so keep that in mind as well. If we were to have a shake move to the downside and that turns into the volatility, that is still what I'm expecting to see, just volatility. Historical pattern, the 06 to the 75 zone has repeatedly delivered around 20 to 35% shakeouts before any cycle peak. And material indicators, again, we have them today after a long holiday weekend of chop on low volume. Purple whales are selling BTC into trade 5. This was posted yesterday as we were moving into 107.5, but as I'm gonna show you in the order book later in the video, they came back to rescue the price from crashing hard. Bitcoin cap and handle breakout gives 230,000 target as Solana eyes 2,800 gain. And this is sort of the hopium that it's feeding into retail, but retail is not paying attention. We are at 19. So I think the writers of articles, William, is gonna have to do a better effort because retail is really not giving a damn. This is just crazy. We have a cap and handle in here that is using a very long term 1 month and pointing towards 4.3k price on Solana. When he does the same on Bitcoin using the full bear market and bull cycle, it points towards 230k. Let me know if you actually believe that. And yes guys, I had a lot of people interested in joining my Discord server, which is now going to be fully dedicated to people that actually have experience in advanced quant optimization, machine learning, Python coding development, data science. Any of these topics, if you are interested, find this post on my Telegram channel, go into its comments, and you're gonna find the instructions along with the Discord server invitation. You will have to write down why you're interested to joining. It's not gonna be a free-for-all. You're actually going to have to be actively participating in this small community. community. If we end up being just 5 people and we actively achieve things together, that is a success of the group. I don't want to have, again, 10,000 people and no one doing anything. So if that resonates with you, you're welcome to join. Just be aware that you're going to have to be active. Otherwise, you are going to automatically get removed from the channel if you don't have the time or the actual interest in contributing too. We got why institutions are suddenly choosing Ethereum over Bitcoin. We got the example of Bit Digital, and I'm looking for more examples really because everybody says institutions and then they just refer to this company. Let me know if you've seen this happening across other companies. Germany has been very against crypto, and this says that Deutsche Bank is building a tokenization platform on Ethereum layer 2. There is now here a list of 3 companies, so I'm starting to see a little bit more evidence. And some articles as well are mentioning that the reason that we are still in sideways is because of the tariffs still threatening in investors' minds. To me, it's really important what the Federal Reserve is doing with the balance sheet, and seeing this decent decline in here is a little bit worrying in the short term for me. Yesterday, we managed to close the second CME gap that we formed in the past few days. This one was the one from the weekend. On Monday, we closed the one from Thursday into Friday. So they are both gone. If we want to look for another one, we actually have to go down to 97.2k on CME or 96.8 price on Binance. These two are now gone. In terms of the Bitcoin status, we are at the same price, so there is no reason to make any significant change. Yesterday, we had a breakdown on the 4-hour and on the daily. You can see here on the daily, the breakdown that got confirmed. Now we are below the RSI of 57. That is the yellow line. So 108.8 A6 is resistance on the daily, and we have a squeeze because we have the price on the top of the range actually still holding that support of 108 before doing for a third time a fake out. Of course, I'm not counting on it, but we are within that squeeze. Either we have to now reclaim 109 roughly, that is our new resistance on the RSI as you can see in here, or we lose that 108 and we re-enter for a third time like we have done once, two, and this will be the third time. If we do that, we have our next support on the daily right there at RSI 40. As you can see, it's being held by this green line there. I'm speculating that this is a fast move, but if it's a slow move, it could be 41, in which case the point of contact could be not just 102.9, but maybe 103.5, somewhere in here, if we kind of lose this 108 that is holding the price from re-entering in the range. And I think that area in there is very interesting because it's been growing at the moment, and you can see that the cumulative right there at 102.9 is 9.59 billion, whereas in here the cumulative is just 3. Of course, that is because we need to do a big move to the downside to get there. We are trading over 108 and getting into 103. That's roughly 5k to the downside. If we go to 111 and we take this area in here, that's just a move of less than 3k. When it comes to the 4-hour time frame, we're getting close to that support of 40, which is currently priced at 107.271. You can see that overnight my support got almost touched in here. It was trading at 107.4 and we dropped into 107.438. That was the support that I left for you yesterday here in the chart. Remember that in my Telegram group, you can always find the latest post and click on TTP charts and get live access to these charts. Of course, there are limitations if you're using the free version. If you want to go for the paid 3 months, 6 months, or 12 months, you get unlimited up-to-date charts, not just on Bitcoin, but on altcoins and TradeFi as well. These are not just standard charts. They contain precisely the indicators that I'm using, whether they are third-party, my own indicators, and my own annotations that are updated every 10 minutes in the system. We also need to note that yesterday we finally broke down from the ascending wedge on the 4-hour. There was a failure to reclaim there, and now we are below in an area of a breakdown. So we need to monitor that support of 107 for potential continuation. If it breaks this 107, it's very likely that we're going to head down into the bullish order block around 106, 105. If we break this order block, we are very likely basically gonna take all the fair value gaps in this area. They are very wide, and that is an area where if we ever get there, we pass very quickly thanks to the slipperiness of the fair value gaps, if such thing exists in English. I don't know. On the CPR model, we continue to be in between pivots and resistance. That is 112.4, and the first pivot is 106. I think now there is a good chance that we could go and visit the support on the daily of 103. It's very heavy in liquidity, so in case we saw some general markets bearishness coming in, I look at the general markets charts before starting to shoot the video, and yesterday close was in the red, just a humble percentage down, and pre-market prices were looking a few points below for most of the major stocks, with some exceptions, with Apple being 1 point up. I will say it's pretty flat, the open today of the general markets. If it turned back into being a little bit negative, we could be seeing a bit of continuation into the next levels of support, either on the 4 hour at 40, being 107. I will reserve the daily meeting with support at 41, being that 103. It needs a little bit of help from general markets being also negative. Something to note as well is the amount of longs that we have in leverage squeeze at the moment. The last time we were at the highs, this was one of them, and we have a move of 4% down. Then these highs in here, this had a move down of 11%, and now we are approaching the top percentile in here at 73. We don't have yet any signal, but I have my eyes on leverage squeeze in the next 1 or 2 days. Hash ribbons could potentially print a buy signal if we get a bull cross of the MAs applied to the hash rate, so that's something also to look for. Things I'm not liking for a long in here is the open interest is getting closer to the top band rather than the bottom band. Being at the top are areas where we tend to have local tops 90% of the time, so if this expands slightly higher in there, we could get a signal to actually short. And in the recent times, we've seen how we flip into liquidating longs for a bit in this area, and now we're back in the red liquidating shorts. It seems to be now a period of liquidating shorts. I don't know for how long it's gonna expand. We'll keep an eye on it. On the 15 minutes, we can also observe the breakdown, but we have a bullish pattern in here, even if it's a microstructure with that double bottom at 107,400 with a neckline at 108,500. So if we could break this neckline, we could potentially get even into 109. Now at 109, we don't have any fair value gap at the moment. We don't have CME gap to attract the price into this trend line that we just lost for a kiss goodbye at that level. So I'm not taking for granted that we can get there for a small scalp. Yesterday, when we were moving up on Monday to take the CME gap, there was a decent order there that appeared just in time to stop the move up, and it did it perfectly well. As soon as we started coming back down, around the same volume came back in to rescue the price, and so the story continues. At the moment, we have again those 400 in here, and they seem to just be playing ping pong in a very narrow range. If we look at Bookmap, we can see that we have a pretty decent 500 in here accumulated, pushing the price, keeping it just there, and below the price there is slightly less, just 180, but it's been the case in all this range. It seems to be that the same actors are just moving the range like that. They did that over the weekend, and now they are doing it these days, waiting for something to change, I guess, in the general markets to trade actual volatility. We have support at 106. That is the biggest level of liquidity that I can find across this range. I'm tracking just 1 week in Bookmap. That's why we won't see any liquidity at 103. We haven't been at 103 in the past 1 week, neither at 112. So we can just focus on this range and the live volatility that is accumulating. If you want to get access to Bookmap, be quick, because there's just 3 days left to claim 50% discount, and you can access this live data on crypto, stocks, forex, everything. In order to claim these discounts, the last day is the 11th of July. You can use the QR code that is appearing on the top of the screen or the link in the description, and then you get to choose between 2 different offers. I think one is 50%, one is even more than 50% if you use the link in the description combined with the discount codes. Another indication to expect volatility to increase a lot more that we have seen in the past month is because it's over 2 weeks that no one gets really liquid liquidated big, and it's like a ticking timer for a bomb to explode in any direction with the price. When we look at the order book, we see how they are spoofing the price. They place the order anytime that there is any chance that there is a breakout to the upside, and as the price moves, then the purple whales pull out. They are not really buying the idea of a breakout, at least as of now. That could change anytime. The brown whales take the biggest positions with leverage, 1 million to 10 million positions, but they don't really have a big impact in the direction of the price. It is actually the purple ones, the second largest ones in here, the ones that by volume aggregated have the final say in direction of price. The wall is 51 million, is decent for the timing where we are. There is very low volume recently. It is indeed declining the volume. So 50 million relative to that is big, but we have seen 300 million on Binance before. That has been the all-time high though. 100 tends to be really big, and we don't have that. We have 55 at 120k as well, and at 115 we have 38, which is very low. On Market Monkey Terminal, we can see how they are defending the price at 108.5 to be very precise. That is on Binance, but the largest order is at 110. In terms of support, we have coming in this 106, which is in confluence with what we were seeing on Bookmap. Now let's go to the order book. Yesterday we were seeing that they were rug pulling in my new indicator that I can access thanks to the professional subscription on High Block Capital. This rug pulling here pretty much caused the price to go from 109.5 when we were moving up on Monday, and we spot that in the video in the morning, and the price went down from there 2%. Not a big deal, you know, but it's good that we can see these things happening. It's very common to see that when they remove limit orders from below the price, then the algos also overreact and we see a little bit of a sell-off. Sometimes just 2%, but sometimes it is a lot more. Remember, the red is orders between 0 to 1% around the price, right? Up or down. Then the green is 5 to 10. So that is pretty far away from the price, like 97 to 100 and something K. You do the math, and then we have the 1 to 5%, which is the yellow one. At the moment, they are all pointing up. That means that they're kind of defending at the moment the price in the immediate term. That is something that we can also visualize when we look at the heat map. That 10% has almost 80 percentile and the 5% has 64. It is very close to the price where we don't have that much. So we could say that the limit orders are a little bit away from the price at the moment. Interesting. So that might bring some volatility as well, maybe for today. Delta is in the negative. The calculations are completely off, throwing billions of dollars, so that's definitely wrong. But let's say that it's a small delta today. Yesterday, large orders were showing a CBD in the negative. That means that there were market orders dumping into the market with this move that we saw yesterday to the downside, whereas small orders were buying the dip. You can see it in green in here. How do I know the sizes? Well, the professional account allows me to limit the ranges. I can now say I want to anchor it to the daily, and I want to look orders that are from 10,000 into infinite. So these are orders of more than 10,000, and these are less than 10,000. I could use any different range, and that we can overlap it with open interest growing or reducing, and liquidation levels as well anchored to the day. Fantastic information to get a very clear picture of what's going on in the market in the order books. We are addicted to data, and maybe today we cannot use this to take any position, but I consider that a success as well. Filtering bad entries is as important or even more important than finding the sexy ones that we really are chasing for. That one that happens every now and then and is pretty much a guaranteed win. On fair value gaps, we just have this thin remaining bit at 108.5 and we are right below it, so we might take it in the next few hours. And as I say, after that we don't have any fair value gaps to the upside, only to the downside into 106 or into 103. The S&P on the 2 weekly so far is showing a rejection from the rally revenge into RSI of 66 that we've been tracking. So all eyes on that rejection, because people only see a pullback after an all-time high, but what we actually see is a breakdown in a revenge rally in this area. Of course, a revenge rally can go beyond that, but I will say it's not a 50% chance of rejection or reclaiming. I will say it's probably a 60 50% or more chances of a rejection here and only 40 or less to break out from these highs of RSI 60A after having lost this level. We'll see. After all, in COVID, we broke down and we reclaim and we continue with the bull market. But I speculate that we managed to do that because it was in the beginning of a new cycle. And I'm not talking about Bitcoin. I'm talking about these cycles that you can observe in the S&P, that somehow the past three are aligned with Bitcoin. So my speculation is, if we're reclaiming here, is just for a kiss goodbye and then we're still gonna put lows. We'll see. Thanks so much for watching. I'll see you with the next one. Remember, now I'm gonna go to record Ethereum and maybe Dogecoin as well. Hit the like and write down a comment down below and you are going to make me happier today. Thanks so much. Bye bye.